Hi, this is Scott broadcasting to you live from Sister Bay, Wisconsin. Thought it'd be a good idea if we're going to be talking about incorporating a business that we might start with a business that's incorporated. I am right now located at Cheesecake Etc. here in Sister Bay, and we are an LLC, a limited liability corporation. So what the heck does that mean? Well, as many of you know, you can hang out your shingle, set up a business, and you are in business. You don't need to file any fancy paperwork, and it's called a sole proprietorship. As a sole proprietor, that means you are in business. You can use a name, trade name if you like. You can register with the Secretary of State of Wisconsin if you so choose, but you don't have to jump through a whole bunch of hoops. You can also form what's called a partnership. That's the second type of entity, where you do have a partner, one or more partners, and you would set up a partnership agreement. Just because you invest the same amount of money does not mean you need to take out the same amount of money in profits or take out the same amount of money in losses. It's whatever you agree to. Third type of entity is a corporation. And we'll talk a little bit about the varieties of corporations that goes with that and some of the advantages and disadvantages. But corporations do require a whole bunch of hoops to jump through. It's things that you would do, and as you set up your business, it may be very advantageous to do a corporation. So why would you want to do a sole proprietorship versus a corporation? Well, the two biggies are limited liability and double taxation. And one sounds good and one doesn't sound so good, does it? The limited liability sounds good. As a corporation, you are a separate entity. You can sue and be sued, but if you are going to get sued, they can't sue you personally. They can only sue you up to the extent of your investment in the company. So if you owned a share of Google stock, okay, trading about $600, and Google stock all of a sudden went bust, you would have full potential to lose that $600, but you won't lose your firstborn, you won't lose your house, you won't lose your car. If you were a sole proprietor, hung up your shingle and said, "Hi, I'm in business," someone trips on your front walkway or something happens, that an accident occurs, you are at risk of losing everything, both from the business and personally. So that limited liability thing's kind of cool. That's kind of good. The double taxation, though, may not sound as good. It's actually two forms of taxes when you have a corporation. One is the corporation itself pays taxes. So the corporation files a tax return and says, "We made some money, we're going to pay some taxes." The other entity, a sole proprietor, says, "We made some money, we're going to pay some taxes, but you only pay the taxes once." The corporation, on the other hand, pays taxes as a corporation. And then when it distributes the money to its owners, something known as dividends, you get taxed again. A double bonus. It's good for the federal government. It's good for the state government. It may not be as good for your pocketbook. So there are trade-offs of incorporating, which does, as I say, require a bunch of hoops to jump through, registering with the Secretary of State, filing something called the Articles of Incorporation. It costs anywhere from $300 to $1,000 to do all that good stuff. On the other hand, a sole proprietor, you can hang out your shingle and you are done. You are in business, but again, there are some limitations. There's also something called limited life and unlimited life. And again, one does sound a little better than the other, I suspect. If I told you limited life, if something were to happen to one of the owners in a partnership or the sole proprietor, the individual that owns the sole proprietorship, the business disappears. Or at least the records go, and then there's probate and there's courts and people try to seek money. If you're a corporation, you transfer what's called your shares of stock, and the corporation does, in essence, live on. So there are many advantages to incorporation. If you were going to get a loan from a bank, they'd probably rather loan to a corporation than to a sole proprietor. They don't want to jump through the hoops in court. They just rather deal with whoever owns the stock and continues the business. So again, a corporation is a little bit more professional, a little bit more longevity, and a nice place and direction to go. And most businesses ultimately should incorporate. The last thing I will discuss is a couple of variations on corporations. The C Corp, which is the standard Google, IBM, Electronic Arts, Best Buy kind of corporation, the kind you might buy stock in, can have thousands and thousands of stockholders. And they are the ones that pay double taxation. There are a couple of variations that actually give you the limited liability benefits, yet have the single taxation benefits of a sole proprietor or partnership. And those are either called LLCs, what's known as a limited liability corporation, LLP's a limited liability partnership, or an S Corp. And all of those do have some limitations as to number of shareholders, so Microsoft can't be an LLC or can't be an S Corp. But for a smaller business or a family-owned business, the LLC, LLP, and S Corp are actually very good options and things to consider. Just some thoughts. Hope this has been helpful. Look forward to continuing to educate us all. Thank you. This is Scott Dell, professor at Marian University, at your service.